Welcome to Business Daily. I am Yusuf Akogu. Let's take our business top stories. Glad to have you back. Now let's go to the stock market and give you highlights of how the market went down yesterday on Tuesday. The market closed positive yesterday, 0.51%. It ended yesterday. The all-share index by itself crossed about 15-year high recorded that we recorded yesterday. If the last time we had this number, not even close to this number, was in March, on the 5th of March 2008, when the index recorded 66,371. That was before the global meltdown. So it's a record breaking yesterday for the stock market, with the all-share index rising to 66,490.34 basis points. Of course, the market cap also appreciated by 0.51%. Of course, on Monday, 325 billion naira were added to the all-share index, and yesterday again, 185 billion were also added as well. So cumulatively, just 2 days of trading this week, over 510 billion naira has been added to the market capitalization of the exchange. Of course, in terms of volume of trade, 436.956 million the volume of trade exchange yesterday, while in terms of value, 7.013 billion naira in a deals of about 7,932 that were actually, exchange among investors yesterday. This is if you look at in terms of a percentage increase, this is about a 79.18% increase compared to what we had from the previous trading session. We look at the top gainers at this moment. Of course, Flamio, they're gaining 10% there to close at 33 naira on the day. Champion Breweries, 3 naira 19 kobo there. It closed on the day, 10% record gain there. Of course, NASCON also gaining 9.96% to close at 54 naira and 10 kobo on Tuesday. We look at the losers. The top losing equities, of course, Computer Warehouse Group on the losing side again today, 10% it lost on the day to close at 4 naira 05 kobo. Linkage Assurance as well, 10% drop there, close at 90 kobo per shares. Of course, Shelaram as well, 9.85% to close at 3 naira 57 kobo. Let's look at the top traded equities by volume. Of course, FBN Holdings there, the mother company of First Bank, 55.1 million volume of shares it traded, while Japo Gold and Ventures, 33.1 million shares as well, and United Bank for Africa, UBA, 30.2 million volume of shares of these companies were actually traded yesterday. We look at the sectorial performance across the continent. The banking sector there is up there, 1.63%, the highest gainer on the day. Of course, the buy interest in that equity was very, very huge yesterday, as investors are indeed positioning themselves to take advantage of some of the positive earnings that were recorded in the banking sector during their half-year report. 1.63% a record gain it recorded on the day. Industrial sector, 0.21% as well, while consumer goods sector, 0.99%. The oil and gas sector is down 0.99%. 0.09%. And of course, the biggest loser on the day in the insurance sector, 1.56%. Let's look at the rest of Africa and see how they are doing. In Joburg, South Africa, the market is down again today, 0.4% there. Of course, the material sector are actually not really looking good there for the GSE market. In Ghana, it's up marginally, 0.17%. While down in Nairobi, the market is down 0.09%. So these are the highlights of the stock market trading across the continent on Tuesday. Of course, the trading is on as usual, and of course, we'll give you updates of everything that transpires on the floor. But for now, we'll go on a very quick break. When we come back, we'll go into our discussion. Don't go away. Glad to have you back. It's the Business Daily right here on Trust Television. Now we go into our discussion. Today we are looking at the key takeaways from the recently concluded BRICS Summit in South Africa. Of course, we'll also look at other issues, the South African inflation, and of course the GSE, the performance of the capital market in that country. And I have joining me virtually from Joburg, South Africa, our investment trader and chief executive officer, founder, Henrea Capital Advisor, Petri Redilingas. Good morning, Petri.
Good morning. Thank you very much for having me.
Yes, glad to have you again. Let's start with the JSE performance yesterday. It went down yesterday 0.04% for 2 straight days of trading. What is responsible for that? I see the material sector not doing so good.
Yeah, good afternoon. Good morning. Sorry, we've done that. It's been a bit of a challenging week. I mean, it's only Wednesday now, so we're about halfway through. I think that we've seen, the market come down sort of the second week of August quite drastically and not managed to recover really since then. What's interesting, though, is the US market was up relatively strong overnight, so potentially we might see a little bit of strength coming into our market at the end of this week. But a lot of the pain, I guess, that we felt has been on the back of a bit of a reversal we've seen from commodities. Commodities have been very strong over the last couple of weeks, particularly sort of last week. And then that's giving back a little bit of ground today. I think commodities really traded well as the Rand really traded well in response to some of the comments and some of the things that came out of the BRICS Summit. And as that positive sentiment is sort of fading out of the market a little bit, we see the market pulling back a little, but nothing too major. I mean, our market is currently sort of flattish, I guess, to slightly positive on the week. So, we're sort of going nowhere slowly. I think the market is now again entering into a phase where it's going to be waiting on what the Federal Reserve Bank in the US will be doing, what guidance they'll be giving on interest rates and what guidance they'll be giving on what they're doing with guidance on inflation and what their plan is to do in the realm of interest rate adjustments and that type of thing. So I think that focus starts to shift a little bit again onto, the potential for economic slowdown, We are, for example, positioning ourselves that we're sitting on quite a bit of cash still. We're looking to buy US corporate debt, US government debt as well, 20-year, 30-year treasuries, as well as increasing our position in gold from around 7.5%, around 15%, just because we are entering into a very defensive position or posture, if you will, because I think that, the general feeling is that at some point, the economic headwinds that the Western world, the US markets, the European markets are facing are going to start to bite a little bit. And we should see, markets come under quite a bit of pressure. And in that event, we want to be in a very defensive position. So we're kind of preparing for that, if you will. And I think that the market is kind of holding its breath and waiting for a sign of either, something positive or negative to come out of the Fed. And just watching those economic indicators, employment, labor market sort of statistics, as well as interest rates and the like on a global level, and really just waiting for a catalyst, if you will.
Interesting there, Petri. Let's look at the investor sentiment. There seems to be more pessimistic than been anticipating in terms of investing in South Africa markets. What do you think is responsible for this? Is it the policy inconsistency by South African government?
I think we've got a number of. I think policy inconsistency is a strong one. I think obviously also the reliable supply of electricity is a very big factor, right? So yeah, we'll have to see. And there's a couple of worrying things around now as well. I mean, we see with the BRICS summit, there's a couple of really positive things that came out there, but not everybody thinks that they're positive, right? A lot of our trading partners, for example, the US, Europe, and Canada, and those countries, can't be too happy with some of the things that came out of the BRICS summit, right? And I think that we, might see those market participants, particularly US-based market participants, retreat from our market somewhat, and be a bit more weary of investing here because of our sort of ever-closing alignment with BRICS nations. So yeah, it's a bit of a mixed bag. I think that looking at what happened at BRICS, I think there's some really positive things coming out there. For example, if we start doing inter-BRICS trade and settling those trades in local currency, that would be really good for the rand, right? As well as all the other currencies that make up the BRICS trading bloc. However, that would be really negative for the US dollar, right? Because, imagine that we're buying oil from Nigeria. As an example, I mean, Nigeria is not part of the BRICS, but if we could buy oil from you and pay you in your local currency rather than having to buy dollars, pay you in dollars, you then have to again sell the dollars to get back to your local currency. It's a lot easier for us to just pay you in Naira, right? It'll probably mean that your currency will get quite a bit stronger as well because you don't have to constantly go out and buy and sell US dollars. So this is a win for both countries, right? However, that cuts America out the loop because they have a lot of their economic strength, if you will, in the strength of their currency. And the strength of their currency is really based on the fact that there's an enormous amount of demand for their currency because all energy trades, for example, in dollars. So energy, wheat, grain, a lot of international trade, metals, minerals, all these things underpin demand for US dollars. Because most of the trade takes place in US dollars. If you no longer have to do that, the dollar loses a lot of relevance, right? And could potentially lose quite a bit of value. So I think that the Americans are a bit worried about what the BRICS nations are doing. And if you look at some of the other things, there's a whole bunch of new countries that are joining BRICS now officially, if you will, which is quite interesting because with Saudi Arabia and the United Arab Emirates joining as well, officially joining BRICS, this means that almost 80% of the world's oil supply is going to be controlled by BRICS nations, which really starts to threaten the dollar, right? Because if we are able to buy oil from Saudi Arabia or UAE, and all the other BRICS nations are able to do the same, and they can circumvent or bypass the US dollar in the process, that's an enormous amount of dollar demand that's no longer there. So this is an interesting sort of power shift, I think, that's taking place. And it's something that I think I've mentioned before is that there's this power shift between West and East that's kind of playing out. Obviously, these things take very long, 50 years or more. But what we saw happen in Johannesburg at the BRICS summit not so long ago, definitely does, continue along that path where this power shift is starting to take place. So what I wonder about is whether or not the West is now going to hit back with, either a carrot or a stick. So what I mean there is either they're going to entice us as Africa with some positive that why we should align with them more than with BRICS, and give us all the sorts of benefits and essentially a carrot, right? Something that is a positive for us, or something that's really nice for us, something that we want. Or if they're going to take the approach of giving us a stick, in other words, punishing us, right, for aligning ourselves with someone that they don't like. I think the second is more likely. I think we've seen, the U.S. policymakers, foreign policy sort of, spokespeople and stuff already making comments around South Africa and other, Ghana was also a target of their comments. The alignment that African countries have with Russia, for example, the Americans have now sanctioned Russia because they've invaded the Ukraine and all the rest, and African countries continue to buy, maize and wheat from them. And how dare the African countries do that? And the thing is, well, the truth is, it's not our fight, and we're buying maize and wheat from them because we need to eat, right? We've got people to feed. So the Americans kind of sitting on the other side of the fence saying, well, you're supposed to be, not supporting Russia because we don't like Russia. And truthfully, that's got nothing to do with us, right? We're just trying to feed our people, and we need grain, and we've been buying grain from them forever, and we'll continue to do so. So that now turns into a threat from the US saying, well, look, if you don't do this, there'll be consequences if you don't follow us on this. So I think that, I think that there's a little bit of tension that's rising there, which is not great. But I do think that if the BRICS nations continue to find ways to work closer together, that we're all going to be the big winners in that equation.
Absolutely, Petri. Interesting submission there. So let me allow you to land on that. Africa, don't you think we have got to a point where we have to take our destiny in our own hands now, instead of waiting for the directive from the West on what to do? At the end of that meeting, we saw that a lot of invitation were extended to many countries, the like of Argentina, Egypt, Ethiopia, Iran, Saudi Arabia, of course, UAE, to join BRICS. But my concern is Nigeria, the largest economy in Africa, was not invited to join the group. What do you think in Nigeria is, why do you think Nigeria is not part of those being invited to join the group?
I'll be honest with you, I don't really know why Nigeria wouldn't be included. I'm not sure. I don't know if Nigeria would be interested in being included. I think that Nigeria would add a lot of value, particularly from, obviously, oil, but also from a tech space, right? There's a lot of innovation that takes place in Nigeria that is really valuable. So I think Nigeria would make a good complementary partner to the BRICS mix. But yeah, and I absolutely agree with you. I think it's time for Africa to kind of stand up and protect itself a little bit. There's been a situation where, for many years, for example, this whole foreign policy thing is a good example. African countries are doing what is in the best interest of their people by buying grain from the cheapest, most abundant source, and Western countries are saying, well, why, how dare you do that because we don't like them? So what, Africa must starve because the West doesn't like our food supplier? Like, that feels very unfair, right? And I think Africa needs to say, well, we don't really care what you think. We've got people to feed, right? And the reality is that we produce a huge amount of, well, probably most of the sort of minerals and resources and metals that the world needs. Maybe not most, but an enormous amount of it. And if we actually start to beneficiate those metals and take control of them ourselves, and instead of exporting raw ores, but rather, starting to beneficiate those products and starting to export, refined ores and start manufacturing locally, I think the power dynamic shifts, right? And that's something that the West is very uncomfortable with, I think. And that's the threat that BRICS poses to them, is that the emerging markets all kind of club together. And when we realize how much stronger we are than the developed markets when we stand together, united, that's a very powerful position to be in. So I don't know. We'll see how this whole thing plays out, right? Like I said, this takes 50 years or more for this transition to take place, but it's definitely begun.
Indeed, it has begun. Let's look at the size of the BRICS nation now. In terms of population, they contribute about 41% to global population. Of course, the GDP 24%, and 16% of trade is held by these five countries of Brazil, Russia, of course, India, China, and of course, South Africa. They are holding all of this. So if they are able to galvanize and bring in more people to join the group, what does this mean for the rest of the world who feel threatened by the the group right now?
Well, I think most notably now with sort of Iran, Saudi Arabia, UAE joining. I mean, it's official that they will be going ahead with joining, which is I think is great news. That along with the countries that are already in, Argentina is also joining, obviously. That's 80% of the world's oil supply. That's massive, right? That is absolutely massive. So it means cheaper oil for all the countries involved, because we can trade in our own currencies rather than having to trade in the US dollar. And I think a little earlier I was talking about how a lot of the economic power that the US has is the fact that the US dollar, for example, is the global reserve currency, right? Most international trade takes place in US dollars. So if that stops, I mean, it's not a huge amount. It's 25% of trade, but that's 25% less demand for US dollars, which means the US dollar is now worth 25% less. So imagine that your currency gets 25% stronger. What does that do for inflation? What does that do for prices of goods and services? Does that mean fantastic? That's really good, right? Imports get cheaper. All these things. It's a strong knock-on effect that has a very large-scale positive impact on our local economies. So I think that is really what this is about. Is that feeling threatened by the BRICS, if you will, is really around when BRICS realize we don't really need the West to tell us what to do anymore. We can kind of rise up and start growing our economies at tremendous pace. And we'll probably see a situation where if you now include all the new countries that'll be joining BRICS, I mean, that's almost half of the world's GDP taking place under the BRICS flag, which is fantastic, right? So it really puts us in a very good position. But I do think that it is going to take a long time before, we start to, big changes like this have enormous impact, but we have to just keep in mind that big changes like this take a long time to actually happen, right? I mean, if you look at any sort of a good example would be Singapore, right? I mean, that took essentially 40 years. Now, on a very big timeline, 40 years is very quickly. But for people like you and me, right, that's like an entire lifetime almost.
Against weaponization of public goods against the West, isn't it? Okay, as many have criticized BRICS now, that since it was set up in 2010, it has not really achieved the desired result. But with the current geopolitical situation, a lot of people are saying that it is more like an opportunity for other countries, to set up and then fight the West.
Well, I don't know. I don't know if I'd agree with that. I think to a large extent it is achieving results already. I think that it is already having some impact, right? I mean, it's been 15 years now that BRICS has been around. And I mean, absolutely, there is an increase in trade between the BRICS nations, right? And there's good relations between the BRICS nations, and our exports to India and to Russia and to China have increased over that period of time because there's favorable agreements. So I think that it has had a positive impact. I think that positive impact is a bit overshadowed by recent economic difficulties, right? I mean, COVID really did a number on the whole world. And we've got our own problems in South Africa with electricity and stuff, right? So a lot of the problems I think that we've been having has either been own goals that we're scoring against ourselves, or the fallout from essentially the global pandemic, right? So there's been difficult times, but I do think that the BRICS sort of agreements and pacts have been beneficial to us, absolutely. I think that if we continue down the path and we now see more...
One of your major allies is Saudi Arabia. So with Saudi Arabia now shifting their oil sales now outside the US dollars, how do you think this will affect the value of the dollar going forward?
Under pressure. I think the dollar loses a little bit of its reserve status, and it definitely puts it under pressure. So I think the dollar devalues over time. But again, it's not going to happen tomorrow. It's going to happen very slowly over the next 5 or 6 or 10 years. But I do think that, look, in the very short term, I think if we do have global financial catastrophe and the markets crash, the dollar will probably still strengthen, right? But I think this puts a bias of a dollar weakening over time, in place over the next 10 years. So I think that the dollar does lose some ground, and emerging market currencies do strengthen quite considerably against the dollar.
Petri Redilinga, founder of Heraya Capital and investment trader all the way from South Africa there. I must thank you for your time on Business Daily today.
It's only a pleasure. Hope you have a great day.
All right. So with that is a wrap on the show today. We'll be back tomorrow. I am Yusuf Akogun.